When we're all new to trading, we all want to have the shortest path possible to becoming a consistently profitable trader. It's very normal for a new trader to think that they're going to be unique and that they're not going to suffer any mistakes that other people typically do because they've seen what other people do and they'll try to avoid that. But unfortunately, to become someone successful, you need to go through difficulties and hardships. So I just thought I'd go over in this video 5 typical beginner trading mistakes which someone may go through, which I actually went through myself. So the first mistake is actually binge watching videos. Now, when you're new, you're very eager to want to get straight into the markets and try and make a lot of money. So what this means is you go on YouTube, you go find a source of knowledge, and you consume as much as you can. Now, as someone who comes from an academic background, it's kind of ingrained in us that the more we watch, the more we think it's going to be productive and the more knowledge we'll consume. But the problem with that is we're human beings at the end of the day, and we need to take time away from the charts and from learning to actually digest the information. Taking breaks is really important, and because new traders think that taking breaks is a waste of time and it's only lengthening their path towards becoming successful, that it's not worth doing, and they should continue learning more and more and more. What those traders will actually find out is that they'll be the ones going back to videos because they haven't retained the information that they've learned. This is something that I've been through myself when I was learning. I'd consumed so many playlists on YouTube from my mentor, and I'd find myself going back to them 2, 3, maybe even 4 times, potentially 5 times as well, because it just never stuck with me the first time. And even while I was taking notes, it would seem very out of context, so I'd have to go back to the videos and try and refresh myself on what the series was about. Another mistake that traders will make when they're learning how to trade is not backtesting and journaling. As with any business, there's going to be a solid amount of work that you're going to have to put in to achieve some sort of result, and backtesting and journaling is the equivalent in trading. You're going to have a lot of time to yourself, and it's very myopic to think that the things that you're going to learn through however way you've been educated through YouTube videos or whatnot, it's going to stick with you and you'll be able to recall it just like that in the charts. It's not going to happen because you're not consolidating the information that you're learning and you're not putting it into practice. So how would you know, and how would you have confidence to yourself when you come to looking at the charts live that what you've learned actually works? How do you know the conditions that they work in? How do you know when it's not going to work? How do you know when it's going to work but it's not actually going to move in your favour? So it's these sort of things that you have to learn through journaling and statistically knowing where and when what you've learned actually works. The third mistake that new traders make is kind of an extension from the last point I made about backtesting and journaling, but it's how they learn the technicals over everything else. You could become amazing at learning the technicals, but if you lack the overall picture of where the market's going to move, you're not going to see any sort of consistency. The entry is actually the last thing that you want to be looking at, because if you can't see where the overall direction of the market is, every trade that you're going to take is more likely going to be a loser then. There's no point going into the charts and seeing where every single of your entry pattern that you just learned works, because you don't actually know what the overall direction of the market is. For example, if the market's in an uptrend and you see your entry pattern signaling a short position, more likely than not, your short position will be stopped out because you're moving against the actual trend. You're taking a counter-trend trade. Imagine if you're someone who didn't know anything about risk management as well. This could this could end really badly for the trader as well, losing significant equity on their account. Being able to understand where your entry pattern actually works in the bigger picture, what scenarios they actually work in, these things you find through backtesting and journaling. So that when you come into the market, you're able to dodge so many losing trades. However, if you're one of these people that wants to catch the majority moves within the day, you want to be able to have a daily bias. What do you think the majority of the direction of the market is going to move in? So if you have that, then you have a sort of framework of expectations on the lower time frames. If you know what the majority of the daily direction is going to be, you'll have a bias. So then therefore, when you look to enter, you'd want to anticipate certain things happening. You would want to have certain expectations that you want in price to see before you take your entry. So I'll give you an example. This is what I do in my trading. I start off with the higher time frames, the weekly and the daily. In the weekly, I want to be able to predict if it's going to be a bullish up close candle or bearish down close candle. From then, if it's bullish, for example, then I'd have a daily bullish profile in mind. This means I could then try and predict what days, specifically Monday to Friday, are going to be up close or down close. So then when I actually go into the charts, into my sessions, I'd have a certain expectation that I want to see in price. If I don't see these expectations in price, then I don't have an ideal setup, so I won't take a trade. So it's more so about increasing your standards and expectations when it comes to what you want to see in price before you actually take the entry. What I like to say is that you want to have an overzealous entry. You want to have something that's so ideal that you won't want to see anything else in price other than this. Now, for a lot of advanced traders, they are able to trade without a bias because the way they trade is on smaller time frames, and that they get in and out of the market very quickly using very low-hanging fruit targets with sound risk management. The next mistake that a lot of traders make is actually learning in a demo. This is something that I actually did for a while, and it's a typical thing for new traders to do, which is to learn the knowledge and then instantly try it in the demo. Now, I always recommend to new traders that they shouldn't learn using a demo. They shouldn't consume the knowledge that they've just seen and immediately go into a demo trade to see if it actually worked. What I usually tell people is actually forward test, or what I call tape reading. So what this means is the things that you've learned, you'd just watch the charts play out. You don't even touch anything. You don't push any buttons. You just tape read. You just watch to see if your expectations in price actually pan out by annotating the charts. This already then gives you confidence that what you've learned actually does happen. What you've backtested and journaled actually just happen, and it's repeatable and it can be measured. You have to do this for a period of time, because the problem with doing it with a demo is that you're adding the psychological thing onto yourself where you need to push the button and time the markets. But I believe there's a stage before that, which is actually seeing if what you've learned is actually going to work. I believe learning when to time the market, of actually pushing the button, is actually a separate stage of your trading journey. And I think the stage before that is actually tape reading, just watching the charts to see if what you see in price actually comes into fruition. And the final thing is actually overexposure to your charts. Now, if you're someone with a lot of free time, what you don't want to be doing is sitting in front of the charts immediately when the session opens or all day, because when you sit in front of these charts, you're gonna want to be paid for your time for sitting there, and you're gonna make stupid mistakes. This is something that I did quite a lot, actually. I would like to trade the New York session most of the time. So what I do is I sit in front of the charts immediately at 7 a.m., 8 a.m. New York Standard Time, all the way up until 11 a.m. or 12 p.m. New York Standard Time. With people nowadays, everyone's attention span has gone so much lower than it used to be. So we're going to get very distracted and we're going to lose focus of the charts very quickly. And if you lack focus, then you're not going to be able to concentrate. And if you can't concentrate, then how are you going to know in the charts that what you're looking for is going to take place? What I didn't realise actually was this mistake is actually what helped me learn something about my own trading strategy. I learned that my own trading strategy would only work in a certain time window. So the way I was able to overcome this was by learning which time window my trading strategy wouldn't work. I just wouldn't look at the charts at all during that time. So instead of looking at the charts from 7, 8 a.m. New York time, I'd start looking from the opening bell, which is 9:30 to around 10 o'clock New York Standard Time, because I know those are most likely when my setup's going to occur. So if that happens, I'm decreasing the chance of taking a stupid trade at 7 or 8 a.m. or before 9:30 pretty much. Small habits like this is what made me avoid so many losing trades. And this is the final thing that I just wanted to say is all these mistakes is actually what someone must go through in order to be able to become successful. There's no unique path or there's no ideal path to learning how to trade. Now, when someone does eventually go out there and make it, they could look back in hindsight through their own journey and tell someone what the ideal path would have been. But thing is, it's not very attractive to someone who doesn't know what they're doing when they first come into trading. If I was to go back in time and tell my past self that you must journal straight off the bat, you must stop learning you must stop watching 1 or 2 videos and retain the information, that wasn't me, because I was so eager to go out there and try and shorten my learning journey. And it's unfortunately just something that everyone goes through, which there might be an anomaly of someone who's been out there, gone and done it within 6 months to a year. But thing is, it's very bold to assume that you're going to be that next person that's going to do it in 6 months to a year. Honestly, the whole time span of a trading journey typically is at least 2 years. If we're being realistic here, it's going to be 2 years. Even me, myself, I still go through issues, I still go through mistakes, and I learn from them. So I hope you found this video useful, and let me know in the comments what your typical trading mistakes were and how you overcame them. If you want to join a trading community, I've got a link in the description below. It's a Discord community where we host weekly calls and live chart sessions talking about different markets, crypto, indices, forex, whatever. I've also got my Instagram where I'm posting my own journey in terms of my prop firm challenge and what I've seen in the markets, and also my Twitter. So I hope you guys enjoyed this video, and thanks for watching.